Hello and welcome to the FinTech Finance Virtual Arena, and today we are going to be discussing how to build a digital bank. Now, it might be a bit harder than you once thought. So joining me today, I actually have two guests that have really gone and done it already. So joining me, we have Matthew Williamson, the VP of Mobiquity. Matt, how are you doing here today?
Fantastic, thank you. Hi, I'm Matt Williamson, VP at Mobiquity, running global financial services with a primary focus on digital banking. Mobiquity is a digital consultancy that helps enable banks either on the beginning of their journey or evolving their transformation into the digital landscape.
And also joining me is Andy Mielczarek, the CEO of Chetwood Financial. Andy, how are you doing here today too?
Oh, look, we're great. The sun is shining. It's a beautiful day. For those of you who haven't heard of us, which is probably all of you, Chetwood is a digital bank in the UK. We've been trading for about 3 years. We're a B2B2C business that runs lots of different product brands and partners with digital distributors. We're primarily a consumer lending house at the moment, but we're in the middle of building and launching other consumer lending products. Chetwood's philosophy is all around deep personalization, micro-segmentation for the customer, and clearly, I'm sure we'll get into that later on.
Yeah, I can. Well, guys, thank you for joining us here today. So with that in mind then, Andy, if I could stick with you just for a moment, just before we get onto the main set of questions, I think it's important, and I don't want to focus on it too much, but the pandemic has obviously changed a number of things. So before the pandemic, what were the enablers that made digital banking possible for you?
I think, and it's an unusual thing to say, but I think regulation has been hugely supportive. I think both of the regulators in the UK have got a competition mandate. They established new bank teams, and when we went to apply for our bank license, it was a great process, right? So I think there was a very definite political drive after the financial crisis. I used to run a chunk of HSBC's business in the UK, so I was working with government in 06, 07, and one of the big drivers from that was we just need to get more banks into the market. And I think there have been, top of my head, 20, 25 new bank licenses granted since then. And I think there were about 3 in the preceding 30 years. So I think regulatory drive has been a big one.
Okay, so Matt, if I could pass the question over to you now. So in your eyes, prior to COVID-19, what really were the enablers that made a digital bank possible?
So prior to COVID, UK Finance reported that around, I think it's 7 something million people were already moving towards a cashless society. And that was mainly through digital adoption of app economy, for want of a better phrase. So the arrival of big techs moving into financial services from their traditional place, such as Amazon Go, leveraging a Netflix model, etc., shifted attitudes and behaviors towards a digital society. If we look at people like Revolut, Monzo, Starling as well, they were really pushing and knocking on the doors of traditional banking and giving people great access to their financial needs through their app or just simplistic digital interactions. So the reality is the march had already started. We'll see that behaviors have changed, and COVID is further accelerating that march towards full digitalization.
COVID-19 has obviously played a huge role on the traditional banks with a large amount of real estate. So, how have you seen COVID-19 impact traditional and maybe even digital banking?
I think we've seen through several of the announcements from the big retail banks, a big change has been the ability for people to not have access to traditional retail branches, which has then triggered the response to close them. And I think HSBC announced 82 branches they're going to close this year. So we have to be realistic, and those customers still need those services. So we need to make sure that although the ability to physically go to a branch is taken away, that you find another way to support those customers. Maybe it's a community hub, maybe it's enhanced capabilities through the digital elements. But we have to be realistic. I think there'll be a hybrid model as we move forward, not that one will necessarily displace or replace the other entirely.
Andy, could I ask you, beyond the obvious, what were the biggest challenges for you when it came to starting a digital bank from scratch?
It's interesting because we built the whole stack vertically. So we built all brand new product engineering and everything else to allow us to be more dynamic and flexible. And I'll talk a bit about that in a minute. But the thing we thought would be hard was the technology. It actually wasn't that hard. What we didn't think about at all, which turned out to be the most difficult, was the organization chart, and how some jobs have to have people with banking experience, but the banking industry does not teach good skills or behaviors for startup, customer-focused organizations. So probably our biggest challenge was kind of combining the two. And we have what we call the Chetwood U now, where we've got a few greybeards on their last job and an awful lot of people on their first job, and that seems to work fine. But I think the kind of middle management tier that comes out of banking are not very useful for a business like ours.
Sure. Well, it's interesting to hear that you can be that agile by not having that kind of middle office and that kind of legacy within that. So with Matthew, can I also throw the question to you? Beyond what people might hear in the papers or in the financial news, what do you think are some of the biggest challenges when building and launching a digital bank from scratch that maybe people hadn't thought of? Because you hear about all these brilliant success stories in the news.
In truth, it's actually the most basic things. We often overlook the basic requirements versus the technical capabilities that we have access to. What you really need to do is make sure you understand your market, your customer, and what they need, not just today, but in the future, and then build the right technological wrapper around that to ensure you facilitate their needs both today, but tomorrow. And that when these changes come along, let's use an example that we are continue to be in and out of lockdowns over the next 12 to 24 months, that you don't have to rip up and replace everything you've built to service the next need or the next requirement. You need to build yourself, a flexible digital architecture that enables you to run with the punches and the challenges, and make sure your customers have access to the financial needs that they require in whatever need that may be. So it may be additional access through an app, it may be additional access on the internet, or potentially, as we mentioned before, access with both, but also factoring in that community hub element where you have the access to physically go and see someone and have a discussion about your financial needs.
Andy, could I come to you, because you've mentioned to me that you obviously you have some heritage in the traditional banking scene and working with the government. So, what were the advantages that you could pull from that experience and apply to creating Chetwood?
I think it's a really interesting question. I think the traditional values of banking should go all the way through. So, I talk a lot with our team about, look, don't forget these are people's life savings you're responsible for. And giving customers the ability to buy things they need, having a return for your shareholders, those things I think carry through and should carry through. And I work with great people in the more traditional banks I work with. I think clearly where we're very, very different is the agility of decision making and the ability to use technology. So I think those organizations are kind of terminally shackled to a legacy technology estate, which is just mind-blowingly expensive to maintain compared to the world we live in.
Yeah, it's almost a different world nowadays when you look back into changing those old traditional systems. Well, with that in mind, if I could actually throw it back to Matthew from an earlier point that you mentioned, Andy, you were talking about how for you the fact that the regulator here in the UK has been so helpful in creating an environment that actually works to foster this new banking innovation. So Matthew, can I ask, where do you see, do you agree with Andy that the UK is one of the more mature markets for digital banking? And can I ask, obviously from your expertise with Ilya, where do you see an opportunity for growth for more digital banking across the world?
So we see, depending on where you are in the world, there are varying levels of maturity, and I think that's the best way to put it. If you look at the UK and Europe especially, it's a much more mature market where customers have got used to certain requirements and their behaviours have changed, and also regulators and traditional banks have understood the best way forward is actually to adopt the best of both worlds. Take your traditional values and processes, but refine them, remove the friction points, and adopt digital capabilities that ensure you understand your customer. If we use Bank as an example here in Bahrain, they were born from a traditional bank, Bank ABC, but they recognized the market had changed, the requirements had changed, and also that their customer base, which was shifting from older generations to much younger, had different requirements and responsibilities. And so therefore they took the best of both worlds and created a digital only bank, but it had a solid foundation from traditional banking. And by doing that, they grew exponentially within 3 months. And now they're looking forward to whatever services they can offer, and constantly looking to the market and understanding through customer feedback what it is they want, and then applying that so the customer actually always gets what they really want in the marketplace.
So speaking of those customers, why do you think that digital-only banking has become such an attractive service to customers?
We saw before the pandemic that the market was already shifting in that way. We use the term millennials a lot, I know, but obviously in their social life, they have the ability to do whatever they want within 3 clicks or less. And certainly that needed to translate, if you wanted to retain them as customers, into the banking lifestyle. And I think that's a key thing, is it's about a lifestyle. It's about the ability to access the services you want as and when you need. Factor in suddenly COVID-19 and the global pandemic, and it actually shifted other behaviors elsewhere. So we can use Mexico as an example. I was speaking with a bank there, and they said that because of COVID, actually over 60s digital adoption has increased exponentially off the back of Uber Eats, ironically. So the desire to get access to food without touching people or interacting with people has driven their digital adoption. And now they're pushing back onto the banking community to say, if I have this in my personal life to get things like food and supplies, etc., why do I now need to attend a bank? Or why do I need to attend a call center? Why can't I access it through my phone? So we're seeing that customer behaviors are shifting, and the banking community and the fintechs need to shift with that to both maintain their market share, but equally attract new customers in the upcoming future.
Interesting. And Andy, can I get your input on that? We've seen digital banks, as Matthew said, just have these incredible new products, these ability to kind of connect with your customers in a new type of way. So do you think that's the core for a digital bank, and with a slick front end, with no real estate, has that really been at the core of why it's attractive to a customer?
And I think, and I'd just like to reinforce one of the things he said. I think the key thing is, if you're a customer of Barclays, your digital expectations are not set by looking at Lloyds Bank's website, right? Where your expectations are set is who is the best digital provider of other services. And when we started with, okay, Amazon one-click buying journey, why can't we do that? And as we are today in our live lend business, it takes 63 microseconds or thereabouts to give a customer a personally priced, fully approved rate. If you go on ClearScore looking for a loan, we will be straight back saying, click here if you want the money. The money's in your account minutes later. And that's the buying journey consumers expect. And I think that's the key thing. It's not digital for its own sake. Is my wife bought something from Argos on Sunday. She was on the website at 5:00 in the afternoon. It was with us at 7:00 on Sunday afternoon, 2 hours later. That's what I expect now. And actually, in banking, we have no physical stock, so we should be the best digital industry, not the worst.
Yeah, I completely agree. And well, Andy, from my notes, we saw you talk about financial inclusion at the FT Global Banking Summit conference in December last year. But how do you think that we can apply that to the UK market with the move from a physical banking system to a digital banking system?
I think in lots of different ways. I think there is a lot of, frankly, rubbish talked about financial inclusion and what it means, and policymakers and do-gooders have this sort of view of the needy classes they need to help. Smartphone penetration in the UK is probably about 90%. The vast majority of people can access financial services through their mobile phone now. I think the biggest thing that we're keen to help with is price transparency. So the way that the market works traditionally is you advertise a teaser rate, you get them in the door, and then they get the mechanic tooth suck, and it's, you can't have the 2.8% because we've looked at your credit file, but great news, I can give you 30% or whatever it is. And I think a lot of the digital businesses, like a ClearScore or a Money Supermarket, are democratizing information now in credit in a really important way. So rather than just applying for loads of loans and getting beaten down, you can find out with no impact on your credit file who's going to lend to you, what are they going to charge, and really excitingly also get coaching on how to improve the management of your finances to get it down. So the reward loan on the Live Loan brand, one of our products was the world's first dynamic loan. It gets cheaper as the customer's credit score improves, and it does that automatically. And I think, you know, we've been running it about 18 months now, and 25% of customers have seen reductions already. We've got customers whose rates have gone down 8%. And you look at us on Trustpilot, we're probably the top rated bank in the country for that reason.
Well, I think that, please.
But the point of that is, what we're trying to do is, we're not taking dumb risks, because if the market says you're a 35% risk, you probably are today. But what we want to do is to help people get the incentive to improve their behavior over time. And what we find with that is, of course, people on those products put more effort into paying us because they're getting that ongoing reinforcement in the product.
Yeah, I think that's absolutely incredible to hit, because so long the industry has been marked by offering new rates to, better rates to new customers. To finally hear that you're using technology to actively improve the customer experience just by banking with you, it just seems so natural. And I think that's absolutely brilliant. So yeah, that's excellent. Now, with that in mind, obviously, Matthew, you've broached it slightly before, but we've heard the UK example there from Andy. Now, with that in mind, Matthew, we saw your client Mohammed Rashid Al Maraj, the CEO of Bank, also speak alongside Andy at the FT Global Banking Summit on this topic. As a partner of Bank, what is your understanding of how the underbanked are being supported in the Middle East, and how do you think digital banks can actually support this underbanked population?
It's an incredibly important and emotive topic, if we're honest about this. You know, the access to digital services isn't necessarily guaranteed for all, but what Bank did was recognize that actually there was quite a lot of debt in youth society in Bahrain. Excuse me. And therefore they realized that in order to do something about this, the best way to access that group was via digital services. And then when we add on to that, access to digital services in Bahrain, most people have access to some sort of smart device at a low cost entry point, and the same with data plans. But we have to recognize that may not work for everyone. So it's imperative that we understand how we help people through this. I think there will be a hybrid model. But I think what's good to see in the CSR world is HSBC launched a banking program to help those that are homeless get them financial services. So I don't think we have all the answers right now, but we have to ensure that although digital is excellent, we need to make sure no one is left behind and everyone has access to financial services. We just need to work out exactly what that means and how we can do it securely and safely for everyone.
Yeah, I think leaving no one behind is so critical with this move to digital. It's so easy to just say that everyone should just be on digital, but some people just don't have the means. With the rise of digital-only banking and the shift in customer behavior that you've mentioned, some people are seeing this as the end of a almost analog era. So do you think we're going to see physical branches actually becoming extinct? And what steps should maybe the traditional banks with huge amounts of real estate do in order to survive in a post-COVID-19 world?
I believe it's about evolution and adapting to the way the world is going. So I think we actually need to extract it to a higher level and say it may well be that the branches do close, but it's the brand that's important. And then you move to a location. You don't necessarily need a single location per brand. What about a community hub or a coffee shop that actually hosts multiple brands who may be competitive, but actually they get the benefit of sharing services or site costs, etc. So I think what we'll actually see is that not the banks go away, but the way we work and interact with banks is what's actually going to shift. And it becomes more of a lifestyle than a necessity or a utility play. So I think it's highly likely, and there'll be different adoption levels around the world, where you will see the banks come to realize that they're better off collaborating even more than they are, not just with fintechs and who are interrupting the space, but also each other to make sure they stay relevant. And they need to understand the market and shift with the times. If you don't have people wishing to go to a branch in the same way they used to, but still want that physical touch point from time to time, you need to make sure that that capability is available. And also you're looking at the demographics. If I use my grandmother as an example, she still wants to go to the branch when she can outside of lockdown in order to speak to someone to understand that. But right now, if you said actually that could be available at the local shopping centre in a coffee house, for example, or some sort of communal hub area, that would appeal more to her than catching the bus into town to queue up at a branch for what is probably a 20-minute interaction, but it's taken 2 or 3 hours just to get there. So I think we'll see the convenience play come into this as well.
Andy, could I come to you and see if you agree? Do you think in a post-COVID world, we are still going to see that kind of balance between physical and digital, while heavily leaning on the digital side, still have that physical element to banking?
It's interesting. I used to run distribution for HSBC in the UK, so I used to run all the branch networks. And my own view is that there is a huge role for that human connection. But actually, it's almost, if you've got it, double down on it, and if you don't have it, don't try and build it. So I think what you end up doing is you ignore your engagement with millions of customers face to face and try and be an average to poor digital bank. Whereas actually, I think there is an ongoing need for those spaces. Now, how many of them, how they're organised is a different thing. I think the economics of bank branches at the moment don't work. Free-from credit current accounts are a big problem. I think there's a much bigger role for the post office in the UK, or shared spaces or something like that. But I think at its core, for a segment of the population, face-to-face branch banking is important. Now, on the flip side, as the CEO of a digital bank, I will never ever open a branch, because you wouldn't start from scratch today. But I think you need to be quite sensitive to how you scale it down. And I think a lot of the banks in the UK are getting to the kind of minimum geography now at 650, 700 branches, depending on how you calculate it.
So Matt, we've talked obviously about the strength of a digital bank, and we're starting to see potentially the end of a physical era because of COVID-19. We're seeing a lot of the traditional banks reduce their real estate. So, I mean, do you think we're going to see that balance that Andy brought up, kind of keep at that minimum, that 600 branch nationwide going on to the future? Or do you think we're going to see one of the large traditional banks actually end their physical presence?
I think we'll probably see an amalgamation, is my view, in that there will still always be a need for some type of physical presence, but it may not be in the traditionally defined way. So perhaps there could be an element where you will have a hub, a banking hub, that will have multiple brands that sit within it, almost like a WeWork type model, but just from a customer-facing service point of view, with some sort of social interaction, be it a coffee house or something along those lines. So I agree. I think death is probably not my definition. It's an evolution of what the banking branch will look like, and it won't be how we see it now. We've seen how big tech has blurred into financial services. I think that's a big part of it as well, that we're actually going to move away that reference that Bill Gates made years ago. You need banking, not necessarily banks. In this case, is it that you just need a place to go to achieve a financial service requirement as opposed to an actual bank? They may operate behind it from a processing perspective, but the actual interaction doesn't necessarily have to be by that brand or that bank.
So Andy, one of the things that has become quite apparent is the market. As you said, there's now 20 or so digital banks that came about after the crash. I'm really interested to see what products to you do you think are critical for a digital-only bank?
I think it's a really interesting question. I think it's particularly interesting post-COVID. I think a lot of the early challenger banks and new banks focused on payments and current accounts, and pie charts that say how much you spent in Starbucks or whatever else. But weirdly, it was the digitization of a very old-fashioned strategy, which is I will put a loss leader out, I will acquire customers who I will monetize and cross-sell later. At Chetwood, we have a fundamentally different philosophy. We see ourselves as a product manufacturer, so each product has to make money on its own. So that means we focus on lending first, because that's where the revenue is generated. Although actually lending is a lot more difficult to do. It's quite easy to give a card away. It's quite easy to build £1 billion savings, but it's quite hard to not lose your shirt when you start lending in a digital environment. But I think certainly when we talk to our investors, the phrase that pays is swim to the NIM. I think businesses like ours that are actually making strong margins on the products that they sell are getting a lot more engagement. I think the time of look at the size of my customer base is probably in the rearview mirror. So I think at the moment it's all about lending. You can't make money on savings, and I think that the interesting thing with our business is, even though we deliver a net interest margin of about 20%, 95% of the customers that take our loan, that's the best possible rate for them in the market. So by participating very carefully, we're able to do a great job for a segment of customers while still getting well paid to do it, which I think is the answer.
I think you've really hit the nail on the head there, especially in 2020. We saw a lot of the large challenger banks, the neobanks that were focused purely on offering that current account, kind of looking at new models and seeing where they could explore with that. And it's interesting to see that is really the money maker. So then if I was to throw it to you, Matt, as well, to you, what do you see as the critical product for a digital bank going into the 2020s?
I put it that it's not necessarily the product, it's the experience that's the most important thing. Because if the customer has a seamless experience, but it feels like it's personal to them, and it's not just an interaction with a technological product, but actually something that feels there's a human interface or a human touch, then that's the most important bit. And then, as Andy referenced about understanding your customer, what's important to them, what capabilities or products you can then offer them. I think so. It's not about the product, because then that is a traditional banking way of we've got a product, let's find someone that it fits for, as opposed to let's service our customers in the best way possible, in a seamless way possible, and then learn from their behaviors, and we can then apply the right products to them rather than having to push out a loss leading product that we have to justify.
Yeah. So guys, thank you very much for joining me, and to all our viewers for watching. It's been an absolute pleasure having you guys here today, and you can catch the rest of the series and much more over at www.fintechf.com, and of course YouTube and LinkedIn. So see you then. Goodbye.